You can be a better leader if you can read financial statements, if you know the language of accounting. There are four major financial statements in accounting: the balance sheet, the income statement, statement of cash flows, and the statement of stockholders' equity. Each of these tell a different story. And as a leader who has command of the language, you can use these statements to get insight into the company. Importantly, companies like Microsoft today have a very complicated business model. These business models evolve with business strategies. By having the expertise to speak the language of accounting, you can dissect these statements and form patterns which allow you to partner with companies to analyze them in such a way to determine their investment prospects and their opportunities for growth. The balance sheet has three important components: the assets, the liabilities, and the shareholders' equity. This financial statement gives you a snapshot at a point in time. The income statement also has three major sections: the top line, where we measure revenue and sales; the middle line, which tells us about operating profit; and the bottom line, which tells us about net income. One very insightful ratio is called the total asset turnover ratio. It's a ratio where we take assets from the balance sheet and revenue from the income statement, and by combining those two measures, we can get an insight into the efficiency of how the company is using its assets to generate revenues. Another major component of ratio analysis could be calculating the PE ratio. The E comes from earnings on the income statement, and P is the price of the security on Wall Street. The PE ratio allows an analyst to more fully understand what are the market expectations given the earnings that are announced. Earnings is a measure that is backward-looking, whereas P, the price on Wall Street, is forward-looking. By making these comparisons, the P, the price, versus E, the earnings, allows you to have deeper insights into what the market is thinking and what the accountants are reporting. Overall, financial ratios used in the right hands provide insight and context to the company's story. Market prices are determined by three things: the numbers, the economic reality behind it; the story, what's the rationale for growth and how we can use resources to make something; and then momentum or emotions. So the combination of the reality or the numbers, the story or the context of the building plan, and the third being the emotions of Wall Street, these combine to form the price. What financial statements do is provide you the inputs to the first two. All managers benefit from being able to speak that language. This language of accounting, having the ability to communicate with your supply chain, with your marketing people, with your investor relation, give you the ability to not only lead better, but to be a contributor to any team that might be formed.